Good morning, KUMB listeners. It's Monique Buchanan and Rebecca Coins. Good morning, Becky.
Good morning, everybody.
Good morning, you guys. I hope you're off to an amazing start. I know that we are getting very close to Christmas. Shopping is happening. Have you did any of your shopping, Becky?
No.
You haven't? Yeah, me neither. I'm not going to lie.
We've been busy.
Yeah, we have been busy, which is a good thing.
Yes.
You know what we're doing? We're helping our listeners and our clients get into homes for Christmas, which you guys, by the way, this is one of the best times to shop for a house. And I know you guys think I say that all the time because, well, I have kind of been saying it because of the closing costs, but every year, no matter what market you're in, it's always a great time to shop in December because a lot of people are more focused on the holidays.
Yep.
And so that means less buyers no matter what market, whether it's a buyer's market or seller's market. It's always best to get you'll have a better chance at getting a great deal when you shop during the holiday seasons for a home. There you go. Less competition, you guys. So we have been busy, which is a great thing. Helping a bunch of clients. We've got a few in escrow right now.
Yep.
Congratulations to Joe Main and his family.
Yes.
They're buying a property actually he's buying a house for his mother in Pahrump.
Yes.
Yes. So, and that's a great thing because she gets out there on average, you guys are going to get like 1 acre out the gate. Yeah. Most of the homes have their own wells. Mm-hmm. So that's like free water, right?
It's going to be gold in a couple of years.
Yeah, it is. You're right because they do not pool they don't pool from Lake Mead. Mm-mm. Their water is, an aqueduct under the ground. So.
Yep. And they own it.
They own it outright. So they get wells and what else? Septic tanks too, right? Yeah. So Pahrump I've been saying this for years though. I said, Pahrump it's growing now. I remember when you could go out there and get a house or like a manufactured home, maybe on an acre land, you could get that all day long for $80,000.
Yeah, not so much anymore.
No, not anymore, you guys. What did you guys open escrow at?
I believe that one was $269.
Okay, so she got it for $269, which is still here in the valley. You're not getting a house.
We tried,
especially with an acre of land for $269.
Oh no, we tried finding something for her in the 300 range, and it was really hard to find anything.
Absolutely, it is. And if you do find something, it's typically townhomes or it's going to be condos. Yes. Which here's the thing, guys: when you buy a townhouse or a condo, sure, the price is lower, but you have to keep in mind that the HOAs are much higher. Okay, so those community association fees typically are over $150, $200 a month to add on top of your mortgage.
Yeah, some get up in the 300s.
Yes, they do. Absolutely. I'm selling one right now, and the HOA, it's a condo, going to list it for $270. The HOA is $310 a month.
Sometimes that's the deal killer.
Yeah, and that's actually why he's thinking about selling the property. But anyway, so that is the deal killer for many people. So maybe even if your principal and interest, your taxes, your mortgage is only, I don't know, $1,800, you have to add on that high HOA.
But it works for some people.
It does.
Some people, they, when they can get attacking at that mortgage payment, and then at the end, that's all you owe. Yes. That's what you have to do every month once your mortgage is paid off.
And that was one of my sellers. That's exactly the position that he was in. Yeah. He bought the property outright, and then he only owed the HOA. So I told him, against, people are like, oh, Monique, you're in the business to sell homes. So I'm in the business to help people.
Yes.
So I think he was a little taken back because I was just being honest. I said, listen, I think it's in your best interest not to sell. Obviously, if you want me to sell your property, I will. But at the end of the day, I want what's best for you, not just put a couple dollars in my pocket. Mm-hmm. And right now you own this outright, right? And so with that being said, you only have taxes and you only have that HOA to take care of. I want you to enjoy your life because we could go out and buy another property, but then that's going to be hundreds of thousands of dollars out of your pocket, and then you're still going to more than likely have a HOA. So anyways, I'm always going to be honest. We are always going to be honest with you guys, not just trying to shove you into a house so we can get a couple dollars in our bank account. Yeah. Because that's not going to help me sleep at night. What's going to help me and Becky sleep at night is that we actually are helping people and being honest with our professional advice.
Yes.
So we pulled back that listing.
Yeah.
And I'm fine with that.
Absolutely.
I even paid for the pictures to be done, and I didn't even ask him for the money back or nothing like that. At the end of the day, I'm happy that he's going to move forward, hopefully be comfortable, relaxed, not stressed out, and enjoy his life because he deserves it.
Yeah. Well, I think that's because how our heart is in all of this.
Absolutely.
Very, very much so. That's why we chose this. I know some people pivot and go into real estate because they think they're going to get rich
fast
quick
money,
or whatever.
See the people online that are living like this and that. I'm like, oh, goodness, no.
But that's not our passion for it at all.
And it's not, a lot of times it's not the truth. We're right there at McDonald's trying to grab something quickly before our next showing.
That's the truth.
Well, anyways, we've kind of got off topic.
Yes.
So today we're going to just go over the basics, you guys, of buying and selling. You know what I mean? Just some myths. There's a lot of myths out there when it comes to purchasing a property. You know, I even was somebody that thought, you know, a lot of these myths were true. So the first thing we want to talk about is renting versus buying, okay? So I love to do this because it made me so upset when I did these numbers myself when I bought my first house. So here's a little example. Renting versus buying. Let's say that you're renting right now at $2,000 a month, right? And you've been at that property for 5 years. Do you realize that you have given that landlord $120,000 gone with nothing at all to show for it? So if you say, okay, this year I'm ready to go ahead and buy. I'm tired of giving my money away. Think about that. That's $120,000 that could have been wealth for your family. What do I mean by that? I mean, when you rent, you're lucky to get your deposit back of maybe $2,500. You've got to sit there and, go through the entire house with video, pictures. God forbid the dog put a stain on the floor or something like that. You're not getting that deposit back. You're lucky to get it back, right? But when you own, you're building equity instead of paying somebody else's mortgage. Because whether you want to believe it or not, at the end of the day, when you're a renter, you're just not paying your own mortgage, but you're paying their mortgage. Right. Yep. You're paying their mortgage. That's just what it is, right? So, for example, if you buy a $400,000 house after 5 years, let's say after 5 years, that house is now worth $490,000. You just made $90,000 in equity. You could sell that house and cash out and walk away with $90,000. So it's almost like you're living there for free. It's like you're paying yourself every single year.
Yeah, you're getting something towards it.
Yeah. Even if you paid in $120, let's pretend that your mortgage was $2,000 a month, right? Yeah. Same thing, right? You're still walking with an up.
Yeah.
You're not losing anything. You're still making money. You still made $40,000.
It's a big chunk.
And that's what I'm trying to get people to understand, the difference in renting. There is no upside to renting.
No.
None. None at all. And I'm not just saying that because I'm a realtor. I'm saying it because I was a victim of being a renter for many years.
Same.
And all the money I could have built for my family had I bought when I was 20-something years old.
Yep.
I would have so many homes under my belt right now.
Oh, if we had known.
And I would work if and when I felt like it, instead of having to get up and having to go to work. That's the difference. The fastest way to build wealth, you guys, is through real estate. That still holds today, right? That's the first one we want to talk about. And then the second one,
how secure you are when you have your home ownership.
Yeah.
So mortgage, I've talked about this. I've brought it up before when my son was nervous about different things, and I try to explain to everybody, when you have a mortgage with a mortgage company, they are not in a hurry to try to take your home if
they
something
don't want your
happens.
house. No, they do not.
No, they want your money. They want your money.
They want you to pay the mortgage and stay in it and work that thing out.
Yes. They don't want to have to deal with all the stuff that happens with having to take the house, put it up for sale, the whole shebang that comes with it.
Right.
So you definitely have much more security. Whereas a renter, 5 days, you're out, your late fees are piling up, you're due on the first, there's no leeway for things. And that landlord is usually not working with you.
No, because you know what? The landlord has to pay the mortgage whether you pay the rent or not.
Yeah.
So he doesn't have time to wait around.
No.
You know what I mean? Because he still has to fulfill his commitment to pay that mortgage.
Yeah, you're costing him money.
Exactly. So I've got an actual real life example about this. I sold a house in Seattle and my client called me and said, Monique, I'm so grateful that you talked me into buying a home. So what's going on? She said, well, my husband lost his job. They laid him off. He was at that job for 26 years. He worked at the port.
Can happen to anybody.
So lost his job. And I said, and I had, when he lost his job, I said, you need to call the mortgage servicers and let them know. She said, I remember that you told me that. If anything ever happens, call the mortgage servicers. Don't be scared and run away from them. You need to let them know what's going on because they will work with you. Well, she did that. Guess what they did? Her mortgage was $3,500 a month, but her husband's laid off. They lowered her mortgage.
To how much?
$500 a month.
Look at that.
$500 a month to help her out while she gets through this.
No landlord's doing that.
No landlord can do it. They can't do it.
No.
Because now you're taking food out of their mouths.
Yeah.
They can't do that.
No. If their mortgage payment is $2,000 and you're only giving them $500 a month, like they have to come up with another $1,500. Like they're not playing.
So security of home ownership, you guys.
Yes.
You just talked about your veteran. She was worried about Tell that story.
Yeah, she was real nervous about closing. She's like, with the shutdown, I don't know if I'm going to get paid.
Right.
What happens? And I was like, girl, day one, that mortgage company is going to work with you. You now own a home.
As soon as you close, you have that security of home ownership, right? So when the shutdown was happening, a lot of unfortunately, our veterans were worried about not getting paid.
Yeah, my son included.
Yeah, your son included. So luckily now that they both own homes, they have security in home ownership. So let's talk about stability of mortgage versus the rent. So a mortgage also is fixed, you guys. This payment, that's fixed for 30 years. You know how much it's going to cost you to keep that roof over your head. It's not like rent where they can go up as much as they want, especially in Nevada, because we have no rent cap here. Yep. You guys remember the news a couple years ago when landlords after COVID were just hiking up the rents. They were trying and they were trying to make up for some of that money. A lot of them didn't get paid. So we have no rent cap.
Yeah.
I mean, I've seen people on the news talking about they raised my rent $500. Well, that's what can happen when you're relying, on being a renter.
Yeah. Well, and some people, because they're in that rental property, right? They feel like the cost that comes from actually having to move.
Yeah.
And of course, whether or not you get your deposit back. And what if their situation has changed since they got that rental? Now they're not making the same money,
their credit
has
gone
gone down. So now they feel pressure to pay that increase in rent because where else are they going to go?
Where else are they going to go? You make up that's a great point, Becky. So a lot of people out there, they can relate to this. You've been in your house for 5 years. Well, now your financial situation has changed. There's no way you can move on to another property because something has changed. Maybe your credit has taken a dive, right? Some people get evictions.
Yeah.
And I tell everybody out there, if you're listening to me and you've got an eviction, guess what? You can buy a house.
Yeah.
We don't care about your eviction. Does not matter, not one bit. And that way you have, once again, security of home ownership. You don't have to worry about, well, I've got an eviction. Where am I going to rent?
Yeah. I had lates the last year or whatever. Like that doesn't always exclude you from buying a house.
It doesn't always exclude you. Sometimes you're right. We can get past those lates. So don't count yourself out. And if you're just tuning in, this is the Welcome Home with Monique show. And this is Monique Buchanan, your host for the Welcome Home with Monique show. You can reach us at 702-984-3700, 702-984-3700. WelcomeHomeWithMonique.com is the website. And you can also email me questions or concerns. Also, you could text me at that same number, but my email is welcomehomeshow91.5@gmail. Okay, so we were talking about stability of mortgage versus rent. Okay, so you have a predictable way to budget, right, when you own your home. Because like we said, the 30-year mortgage does not change. The only way it goes up a little bit is if it's taxes. If your taxes are raised over the years, usually not that much. I think my taxes have maybe went up maybe $40 since I've lived in the home. So you've got taxes, but the major one is insurance, obviously you can shop around just like with a car.
Yep.
My insurance just went up and it raised all of a sudden my mortgage was $200 more. And I'm like, wait a minute, what's going on? Sure enough, it was my insurance. They went up on my premium. So I simply just shopped around just like you would with your car. In fact, you can bundle. And now it's right on back down to where it was. You know what I mean?
I've even had my mortgage lowered.
Ooh, well, we're going to have to talk.
Yeah. Not by a ton, but every little bit helps.
Yeah, it does.
Yeah,
so if you can find a great deal on that, then that can actually lower your mortgage. But it's locked, you guys. You have that sense of security. Nobody's going to knock on your door and say, hey, you've got 30 days to move because we've decided to sell a property that we own that you're renting.
Oh, and you know what else I want to mention?
What's that?
When you have a mortgage as opposed to a rent, I can pay up to the 15th of the month with no late fee.
You're absolutely right. You absolutely can. So that's the difference in being...
Need that Christmas cash?
Yes. You can postpone that payment, honey. Actually, and to be honest with you, you just get hit with a late fee, typically like $100 if you're paying after the 15th. So you really could go all the way to the 30th.
Yeah.
It's just going to cost you $100.
Yeah.
Now, if you go over the 30th, now you got a 30-day late, obviously. But you literally can wait to pay your mortgage all the way up to the 29th day.
Yeah.
And just pay the late fee if you had to.
Yeah. And we're talking about, because this is real people. Real people have struggles in life. Like we are not, I don't know about you, but I mean, all of us have had our ups and downs through life. There's something happened or an emergency happened, and
it's nice
you don't
to have
know what
that
you're
cushion.
going to do. Yeah.
Yeah, it's nice to have that cushion. You don't have that cushion when you're a renter.
No.
You got to work something
That's a
out.
lot of stress.
Or you'll get that paper on your door. So let's go on to if you're deciding, I want to buy, but I don't how am I going to juggle all this? How am I going to juggle buying a house and then I still have my rental right now and it's not done. My lease isn't up until February. So, okay, get this, guys. Whenever you buy a property, you always skip 1 month's mortgage, okay? So let's say that we give you keys. Becky gives you keys on January 1st. Your first payment will not be till March 1st. And if you tell Anthony, our lender, hey, I actually would like to skip 2 months, you can do that. He can line that up for you as well so that your first payment won't be till April 1st.
Yeah, depending on when we close, determines whether you're skipping 1 or 2.
So it gives you some breathing room to, to have those moving costs and things like that. So let's talk about this one.
House hacking. Millennial house hacking.
Yeah, that's another word for it. AKA buying with multiple people, family members, or even friends.
Yeah. Nowadays, we have a lot of clients that are, you're roommating with people.
Yeah.
So instead of pulling together to roommate with people
for
in a rental,
yeah, make some money on it.
Why don't you all go and invest in yourselves?
And you're each equal owners. Each one of you are equal owners. So you don't, we've had people that have come to us with 5 people.
Yeah.
5 people been on the loan. That's fine. Not a problem. So you can buy together and,
it's not just mom
combine,
and dad.
Combine your income. So like your clients, Kyle and them, him and his friends were going to buy a huge house at like $800,000 because they were going to pull their income together. Like they, they're service worker, people.
They're like, we
they're
spend
in
a lot
industry.
of time together. We enjoy hanging out. We do vacations together.
Let's
we
buy
spend
together.
all this time. Why not?
Yeah. So they were going to buy the $800,000 house with the pool and all the things, and go for it. And then just split the mortgage.
Yeah.
So that's definitely an option for like siblings, cousins, parents, kids, friends, anybody really.
Yeah.
It helps you to qualify for more home and to share that long-term equity growth. So down the road, when you don't feel like living together anymore, the other person can what we call buy you out. So what they do is they take the equity from 5 years. Remember, I used the example of $90,000. They say, okay, well, here's your portion of the equity, and you just pay the person out. Here's your $40,000 or whatever it may be, right? And then they go on and they go buy their own property with the equity that they made from when you guys pooled together.
Yep.
Smart way to do it.
Yes, absolutely.
Smart way to do it. And then each one of you can just use the equity down the road and take turns and buy your own properties. Now it puts you in that position, right?
Yep.
All
House
right.
hacking 101.
House hacking 101. All right, guys. So now we're going to talk about vacation homes and investment properties. I do want folks to know when you have a vacation home, it's only 10% down, but it typically has to be about 100 miles away from where your primary residence is. So if you're thinking, oh, I really love to go fishing, like my husband.
Yes.
He loves to fish. So we were looking at buying a vacation home up in Minnesota where my cousin's at, right? There's plenty of fishing up there. So we would only have to put 10% down. For instance, we found a very cute house out there. And remember, we are in all 50 states, you guys. We can help you relocate to any state. So you can reach out to us if you're thinking about moving to any state. So Minnesota, $300,000 house you can find all day near the water, sometimes on the water. Because it's 1,000. Was it 10,000? Home of 10,000 lakes, right?
Yeah.
So anyways, $300,000, you only have to put down $30,000 because it's a vacation home. So keep that in mind. Now, if it's an investment property, if you're going to make money or rent it out or Airbnb it or any of those things, that's when you have to put down 20%. You hear Big Mama and Grandma and Grandpa talk about, oh, you have to put 20% down. They mean well, and that is the best practice, but you don't have to put 20% down. Only if it's an investment property, okay? And keep in mind, when you are buying an investment property, you cannot use down payment assistance programs. That would be amazing.
Yes. Right.
But yeah, so just keep that in mind. That is a myth, okay? When you buy a home and it's your first time, just meaning that you have been a renter for the last 3 years. I don't care if you bought back in the day and then you sold it. None of that matters. If you have been renting for the last 3 years, hear me please. You are considered a first-time home buyer by FHA guidelines. Okay, so that's great news for a lot of people because they're counting themselves out thinking, man, I can't get that first-time home buyer benefit because I was on my mom's deed back in the day. And that's here. We're here to break up those myths. We're here to help you achieve that goal of home ownership. Hey, as soon as 2025, because we still have 2 weeks, or 2026, we want to help you get there. So also, we're going to go ahead and talk about something that I'm very excited about since I said 2 weeks. I'm just going to pivot to that real quick. I want to pivot to that because we do have 2 weeks left in this year. My investors out there, a lot of them are scrambling to buy a property because what happens is, do you want to pay yourself or do you want to pay Uncle Sam?
Exactly.
Right? For instance, my business owners, if you've been told by your CPA, hey, you're going to owe $30,000, $40,000 this coming up year from what you've made, right? What you can do is simply buy a property, spend that same $40,000 on purchasing an investment property, and now that's a complete write-off. And now I'm not a CPA, consult with your tax person, okay? But this has worked for me, so I'm just sharing what's worked for me, okay? It's my understanding and what I've went through that you can write off that and offset it completely. So that's why we say, do you want to pay Uncle Sam or do you want to pay yourself? And also build equity and wealth and continue to do that and just roll it over. That's why you hear of these investors at the end of the year scrambling to either buy a very expensive car that will offset their cost with their tax liability, or they're buying properties to offset their tax liability. And I say properties are a much better way to go because obviously throughout the year, you have way more tax write-offs with that property. With the cars, you only get that one hit. Yeah. That's it. So that is the gift that keeps on giving is the real estate when you buy in real estate, because now you get to write it off and you get to continue to write off any and all costs towards that purchase, right?
But wait a minute, Mo.
What you got?
We're almost at the end of the year.
Oh, that's right. Bring me back.
We're almost at the end of the year. What do you mean? How are we going to buy a house in that amount of time?
I know. We only have like 2 weeks left. Well, guess what? Your Welcome Home team can do it.
That's right.
So here's something that we're excited to roll out, right? So our team lender, he has got a product that is exclusive to him and his company. They have a new system in place where when you call us to get pre-qualified, we are able to send you to him, and you do not have to upload 75% of you. Let me stop. 75% of you work at jobs or places that are able to be verified online, right? And that's what this system does. So you don't even have to upload any of your income documents because this system searches and gets everything verified online. In other words, what do I mean by that? Normally, it's a back and forth. This cuts out about 2 weeks of back and forth with the underwriter. Cuts it completely out. What does that mean? It means that our team lender is able to not pre-approve you, but underwritten approve you, which means you're definitely getting the money, right? And of course, I'm not a lender. Let me just full disclosure, but he's saying he's able to underwritten approve you within 2 weeks. In other words, we'll be as good as cash.
Yeah.
So as long as you are able to get with us within the next couple days, right?
Yeah.
Hey, we get right out there, we find a property, we already have you underwritten approved. So my lender is able to get you closed in 2 weeks before January 1st. You know what he's been doing? He's been saving a lot of people's deals right now.
Oh, I bet.
Yes, because he's saying that a lot of people have been falling out for different reasons. And then if you were to try to go with another lender that does not have this tool, it's going to take another 2 weeks just
Start
to even
all
get
over again with paper pushing.
But because he has this system in place where if you're the 75% where most of your stuff is all online, he can go ahead and get you the 100%, because even if you don't, you just have to upload the income documents and then you'll still be underwritten approved same day.
It's insane.
Which means 2 weeks. 2 weeks and we can have you in a home. So it's unheard of, you guys. We're pretty excited about it.
Yes, we are.
So our
Wave
clients,
of the future.
Yes, and who likes uploading documents? Not me. Okay, guys, and what I really want to talk about too, about when it comes to 2026, I want to make everybody aware out there that we now still have down payment assistance programs where it will cover your entire down payment, okay? As well as some of your closing costs. What does that look like? Can you give them an example of what that would look like on a $400,000 house?
Yeah. So on a $400,000 purchase, for example, your 3.5% down is roughly $12,000. It's covered by your assistance.
Yes. So nothing, you guys are going to give you $12,000 towards your down payment. This is an example of the $400,000 house, right?
Yes.
And where can they get that money from? Even if they didn't want to use down payment assistance, they could pull it from.
Oh, 401k is a fantastic, to me,
Yes.
option.
My first home, I did that.
Yeah.
And
My
there's
mom
no
did that.
penalty. Yeah, your mom did it too.
Yep.
Plenty of my clients have done it because the casino, most of the casino workers have 401k.
Oh, yes.
And that they're not touching. Even like our Clark County workers, a lot of people have 401k that they haven't touched in 10, 15 years.
There's no penalty.
There's no penalty. Of course, you want to check with them, but I can tell you right now, no penalty typically.
Yes.
Okay. So the closing costs that's the other half that you would be responsible for when it comes to purchasing. And that is what percentage?
Usually 3%.
3% closing costs typically, right? So that puts you at about a $9,000 cost. But here's the thing, guys. That's why we've been telling you guys, the window is shutting. But right now, as it stands, we have been able to get, if not all of the closing costs, half of the closing costs paid from the seller. Of course, it depends, though.
Yes, I want to give that caveat.
We have to do a big hard stop because I told you guys this was coming.
Yes,
we've been warning y'all,
and it is here.
It is here. So in some cases, it depends on what area of town you are looking in. If there's a lot of competition and the price point you're buying at, right? If it's a much more affordable price point, then there's going to be more competition, right? Give them your example of what's going on with you.
Because these sellers they're not fire selling their properties.
No.
Let's be real. They're not. I mean, they have their own motivations for why they want to sell, but they're not trying to give away their properties.
Nobody is. And neither would anybody under the sound of my voice.
Absolutely. But they are willing to work on most
and
of
negotiate.
the time.
Yeah.
But we have one client right now. We've put in multiple offers, and multiple times we've gotten a counter back that says we have multiple offers
on this property.
You better come with your highest and best.
So we're already starting to see this, and I just want to let you guys know that we have not seen this. I have not been seeing highest and best or multiple offers in years. It's almost about to be 2 years since I've seen that. Right, Becky? What price point is a client
at? He's in like the 550 range.
What area of town is he looking at?
Henderson and Green Valley.
Henderson and Green Valley, 550 range. That's an affordable price in that area, right? So that's what we mean by it depends on what area, what price point. There are multiple offers already hitting the market, you guys. So if 2026 or even this 2-week window is your time to buy, if you're an investor, you need to hurry up and get something so you can write it off. Or if you were just thinking, hey, I want to get something before the first of the year, or even whenever, you guys, it's multiple offers are coming and they've already arrived for some price points and for some areas of Las Vegas. Okay, so we are there, you guys. So let's go ahead and wrap up the show. I hope you guys enjoyed our nuggets.
Right.
And I hope that they, helped you guys. But I do want to remind you, I have one listing because my other one is gone. You guys, it's gone. My 916 Cary Grove, it is sold, honey. It's gone. All right, somebody's going to be a happy camper with that 4-bedroom corner lot with solar for $409,900. We sold that bad boy. It's in escrow.
Yeah.
Accepted an offer. We accepted an offer last week.
Yeah.
So congratulations to my family out there. I'm so happy for them. They're going to move on to Texas and start their new life in Texas, and we're going to get this thing sold.
Yes, we are.
So I still have 3806 Internet Avenue, which is shocking.
Yeah.
But not really, because like I said, the houses are sitting, even when they're beautiful, even when they have the pool, the waterfall, the RV parking, they are sitting.
The no HOA, the single story.
Right. The 14-foot ceilings, the office and 4 bedrooms.
the dream checklist.
So we're pretty much describing the listing at 3806 Internet Avenue. You could check it out online. That property is being sold for $780,000, 3-car garage. Like she was mentioning, pool, fruit trees, grown fruit trees in the back. It has solar as well. No HOA, single story, RV parking, RV hookups. And by the way, every home in that area is selling for way more and has sold for in the 800s and above. Yep. Right? So I consider it a daggone good deal, in my opinion. But
I agree.
So $780, you guys, that property, 3806 Internet Avenue. All right, guys. Well, it's our time. Our time is up. And until we hear from you, we pray that you have a great, great week.
See you next week.
See you next week.